Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Ron Malero.
And we are the FAIRtax Guys. And we kind of hate to start the show on a bit of a downer, but we have to note the passing of a very efficient, very prolific FAIRtax volunteer who I unfortunately never got to meet at all, but you knew him pretty well. So Ron, just take this away.
Yep. Larry Walters, who lived in the Orlando area, he was a longtime volunteer and expert on the FAIRtax. Unfortunately, he passed away a few days ago. There was a Facebook post by his children on his Facebook page. Larry was involved in the Florida FAIRtax effort from the very beginning. I believe AFFT was formed in 1995, the national group, and from there they branched out with various state groups. And when the Florida state group was formed, he was one of the first ones. And not only did he appear at a lot of events, in information booths and so forth, handing out information and explaining things and answering questions, but he and Mark Maneri for about 10 years did a monthly FAIRtax webinar. It was very good. It was very good. I always learned something every month when I tuned into that webinar, because Larry was like an encyclopedia for the FAIRtax. People, they would have a presentation about the basics of the FAIRtax. Then they would stop and they would take questions that people were typing in. I never saw Larry stumped. One time he said, I'm going to have to look that. I have an opinion, but let me check something. Sure enough, he came back a few minutes later and said, okay, this is the answer to that question. And no, I don't remember the question. But unfortunately, Larry has left us, and Florida FAIRtax and the nation, all the volunteers in the country are sadder for it, because Larry was a very strong and active and knowledgeable volunteer for the FAIRtax. So we're sorry to see him.
I read the Grassroots Corner about him. I get the little preview on those things, and it notes that somebody has got to be a really strong supporter of the FAIRtax when your obituary photo has you in a FAIRtax hat. That's pretty cool. I'm sorry I never got to meet him.
Yeah. He's I met him a few times. You were still working. I mean, you hadn't retired yet, and I met him a few times at various events in the Orlando area.
Okay.
But so
we got to move on here to the. I don't know if this is an upper or a downer.
Okay.
Depending on what we find here in congress.gov, our weekly foray into the craziness that the Congress critters are doing to the tax code. Again, go to congress.gov, put the words Internal Revenue Code in quotes in the search bar up at the top. Be sure you've only got legislation in the current 117th Congress checked there on the left side. And as of the day we're recording this, July 9th, if you do that, you get 943 hits on that search, which is how many a day now?
I think Congress has been in session 104 days, so they hit the 9 mark.
Oh, they're back over the 9 mark.
Yep, they're over 9 proposals each day they're in session to change the tax code.
Well, here's one of them, H.R. 4367, to amend the Internal Revenue Code to provide a partial exclusion from gains for interest in a socially disadvantaged business and for other purposes. Now, what exactly is the definition of a socially disadvantaged business? What qualifies and what doesn't?
I've never heard that term before. A socially disadvantaged business. I really don't know what that means. But obviously, somebody thinks that there should be a modification to the tax code.
Partial exclusion for gain for interest. This looks like if you invest in one of these socially disadvantaged businesses and you realize a gain from that investment, that you get at least a partial exclusion on your income. Some of that doesn't count. So that's what it looks like. Of course, they don't have the text here. We get these in fairly quick order. Now, this one goes into the tax proposal hall of shame that we're going to look at the end of the year. H.R. 4312 to amend the Internal Revenue Code to remove short-barreled shotguns from the definition of firearms for purposes of the National Firearms Act and for other purposes. Now, I went back into my Hall of Shame document here, and they have got several of these things. H.R. 95 amends the Internal Revenue Code to remove silencers from the definition of firearms. H.R. 1758 removes the short-barreled rifles from the definition of firearms. And this one, H.R. 4312, removes short-barrel shotguns from the definition of firearm. Before long, nothing's going to be a firearm anymore.
It doesn't make sense. It still shoots, it uses gunpowder, it uses shotgun shells, and it shoots projectiles. I mean, and it can be lethal.
Yes. My favorite firearm one still is H.R. 2466 to amend the Internal Revenue Code to include armor-piercing concealable weapons within the definition of firearms. So shotguns and rifles and silencers don't count, but armor-piercing concealable weapons will count as firearms. And
I guess we would have to know what the definition of firearms in the tax code means. I have my own definition of firearms, but what does it mean in the tax code? It could be something entirely different.
Oh, we could take all show and then some trying to figure that out.
Yeah,
we need to move on here. Now, this is something else we could dig into for quite a while, but we're just going to mention this in passing. H.R. 4290 to amend the Internal Revenue Code to prohibit 501c3 organizations from providing direct funding to official election organizations. Now, I thought that was already a provision of 501c3, but the idea that the federal government through the IRS is deciding who gets a tax exemption and who doesn't. And if you remember, not long ago there was a chairman's report about this group in Texas that was denied a tax exemption.
Oh yeah,
Christians engaged. The IRS has reversed that decision.
Oh, gee, yes. Big surprise!
That just came out. They got a lot of blowback about that. But why is
because they got hammered.
Yeah, why is the IRS in the business of deciding stuff like this anyway that can be used politically against their? You need to get rid of the entire Internal Revenue Code, get rid of the Internal Revenue Service, and you won't have this garbage.
Yeah, the tax code should be there primarily to raise money for the federal government. No, they got to throw all this other stuff in here. I almost knocked my wife's display over again.
Yes, don't do that. But we can do a whole show on the evils of how the fair tax or how the income tax is used manipulating these 501c3 things.
Yeah.
One more here real quick. We got to move on. H.R. 4210 to amend the Internal Revenue Code to provide a special rule for certain casualty losses of uncut timber. Yes, that's what it says. To provide a special rule for certain casualty losses of uncut timber. I ask you, what the heck does that have to do with collecting taxes?
I guess you lose inventory. Like if your forest burns down before you get a chance to cut it down and use it, send it to a lumber mill. I don't know. Again,
who knows?
It demonstrates how people in Congress want to use the tax code to address every single aspect of life in America instead of just raising revenue.
Indeed. Okay, well, we'll have some more of this craziness from congress.gov in our next Fair Tax Power Radio episode, which is going to be a special one.
Yes.
Because it will be coming to you from WTOB in Winston-Salem. The next Fair Tax Power Radio that you hear and see will be recorded on Sunday morning, July 18th. So if you're up that early at 8 o'clock Eastern Time, you can get WTOB on their website, WTOB980.com. You can stream it from there. Their signal's available on several other streaming sources, and hopefully a couple of folks will wake up early enough next Sunday. Of course, if you're watching on the video or listening to the podcast, it was recorded a couple of days earlier. But hopefully we can get some pretty good phone calls Sunday, July 18th, live on WTOB. It'll be good to see our buddy Bob Scarborough again.
Yep. And we did last year, and we will video record it. So the following Tuesday, it will be a regular episode of FAIRtax Power Radio. Instead of having our normal backdrop, will be all of us squeezed into this tiny little radio station.
Yeah, probably with little microphone stands in our faces like it was last time. Radio studios are not designed to do video. I know that for a fact.
But we manage.
And it's going to to be fun to be there, and hopefully we'll have a good time and get some good questions. That's how we met Laura McHugh, because she called in last year.
That's right.
Which is pretty cool. Now, before we go on, we got a really neat question from our buddy Lance.
I've never heard this one before. This is great. And Lance has emailed us before. He says, the FAIRtax Guys, does the fair tax apply when you buy an existing business? And what about a new franchise? Okay. Well, if it's an existing business,
well,
it's not a retail sale.
Well, even buying a new and we had this confirmed. Steve Hayes, we ran this question by him,
yep.
And he basically said buying a business of any kind is an investment rather than a retail purchase. So in either of those cases, the fair tax will not apply. Good question, though, Lance.
Yep. Now, there is one little detail. There are businesses.
If you do that through a broker,
yeah,
the broker is providing a service to you. The fair tax will be charged on that broker's fee,
yep,
but not on the purchase price of buying the business.
That's right. That's right. So, Lance, thank you. That's another great question. We appreciate it. We just love getting these questions from our listeners and viewers.
And if you've got one, thefairtaxguys@gmail.com is one way to get it to us. You can leave it on our Facebook page. The email address, the Gmail address, is probably the best way to do it.
Yeah.
But that's how that. But that's an excellent question.
Yeah, it was. I don't ever remember seeing that one before. So
but yeah, buying a business is an investment, not a retail purchase. So that doesn't count for the fair tax. You can buy that without any fair tax at all, and without the embedded cost of the income tax system in it either.
Yeah.
Okay, we have got to move on to a fairly new idea that has just surfaced in the global marketplace.
Yeah.
A global minimum tax.
I just don't even like the sound of it.
No.
It's bad enough that we have to deal with an income tax here in the United States of America, and a lot of income taxes in a lot of countries around the world, but now they're floating this idea of a global minimum tax. It's a bad idea from the beginning.
Yeah, they have noted that multinational corporations have long used, they call them creative but perfectly legal ways to shrink their tax bill. So the world's richest economies are getting together to jointly pursue revamp of a global tax system that would undercut the effectiveness of such a strict. In other words, they want to eliminate tax havens.
Yeah.
From the rest of the so if a particular country wants to lower its tax rate and attract businesses thereby, the other guys are going to get together and says, we're not going to let you do that. There's something inherently wrong with that kind of thinking.
It certainly is. I mean, first off, governments create an income tax, all right? Lots of governments around the globe, okay? Then the governments make it more complicated, generally favoring the rich and powerful, okay? And so they make it more and more complicated, all right? Then wealth envy evolves into more laws trying to even the playing field, which just make it more complicated.
Okay.
And then, like Bob said, there'll be some countries that they will lower their tax rate, and we're specifically talking about corporate tax rate. All right, and I can give you an example. My youngest son works for a company that's based in Ireland. Why is it based in Ireland? Because Ireland's corporate tax rate is 12.5%, whereas ours here has been lowered to 21%.
Something.
It was up around 35.
Yeah, let's call out the culprits by name. What countries are involved in this scheme here?
Yeah, it says the group of 7 nations. I'm looking at an article by Bloomberg that was originally published in April and then updated last month. Group of 7 nations: Canada, France, Germany, Italy, Japan, the UK, and the US reached an accord to support outlines of a new global tax system that will change how much corporations pay and to whom they pay it. A worldwide minimum corporate tax of at least 15% would reduce the attractiveness of tax havens.
Yep.
Well, that's just too bad that tax havens
That's
are...
what they're trying to do. They're trying to defeat the free market economy. And so this is basically how it works. A scenario from the article that says a company headquartered in a country A, for example, we can call that Ireland, that has a low tax rate. In this case, says where the tax rate is 11%, with that global minimum rate of 15% in effect, that country that has an 11% rate would have to up that 11 to 15. So it says the minimum is now. In our case, if it's 21, you can be above it. But you can't. You cannot have a tax rate below this 15% if this proposal goes into place. So the upping it by 4% represents the difference between country B's rate and the global minimum tax rate. So of course that means that just undercuts any advantage that the lower country would have in attracting people, because if you move to country A, it's 15%. If you move to country B, it's at least 15%. If you locate in country C, it's 15%. Country D is 21%. We won't even think about him. But that's what they're doing. So they're trying to...
This sentence here in one of the sections here says, the legal and not so legal use of tax havens. I'm not sure what's not so legal. All right, the legal and not so legal use of tax havens costs governments $500 billion to $600 billion in lost corporate tax revenue. Only if you believe that all money belongs to the government would that be true. That's what I was saying.
The most odious thought behind that is that the government owns that $500 to $600 billion in the first place, and it doesn't.
Yeah, imagine the nerve of them letting companies keep their own money.
Wow.
Oh, what a concept. All right. So anyways, who benefits from the current system? Many big corporations. At least 55 large U.S. companies reported paying no U.S. federal taxes, income taxes in 2020. Yeah, because that's the tax code that Congress has given us. All right. They're 100% legal. All right, and that shows you, again, that's another aspect of our tax code. No, it is not fair, and some people are not paying their fair share, but it's 100% legal. It is a bad situation.
And again, corporate taxes are passed on to consumers. So if you get this 15% global minimum tax, who's going to pay it? The people who buy the products and services of the companies who are being taxed.
Yeah. So, all right, now I'm looking at an article by Politico. And this was the Politico emails something they call the weekly tax. Comes out every weekly, strangely enough.
Wow.
Every Monday, except this past Monday was July 4th, so it was a holiday, so they sent it Tuesday. Anyways, weekly tax. And this came out July 6th. And get out of there. And anyways, another big week for global tax talks. And I started reading this and I realized they talk about the global tax, but they didn't really define it. That's why I went and looked up that article on Bloomberg, and I found that. What is a global minimum tax? Okay. So anyways, okay, now what? The march toward a global tax deal keeps moving forward this week, with the next step scheduled to take place at the G20 finance ministers, as the G20 finance ministers get together in Venice. All right, negotiators will still have to hammer out lots of granular details of somewhat elevated agreement on a 15% global minimum tax and wholesale changes on which countries can make tax profits can tax the profits of big multinationals. All right, they're so worried they're going to miss some taxes. What are they missing here, Bob? I'll
tell you what.
The fact that the income tax is so inefficient, even in other countries, all right, and so convoluted that people can find legal ways around it and reduce their tax burden. Well, we can't have that.
Mercy. Just wonder what happens, though, if this global minimum tax comes and we bring in the fair tax and our global, our corporate tax rate is 0. Do we have to dump it up to 15%?
Yeah, that's, Yeah, anyways, but there's still a long way to go until October when the final deal is supposed to be ready. Plenty of questions still about how the agreement will land among developing economies. Yeah, all right. Europe's low-tax countries like Estonia, Hungary, and Ireland got the most ink among the 9 holdouts. Oh, there's holdouts?
Oh, yeah, I would. Yeah, I didn't see those names on the list there.
Yeah, but it's worth noting that Nigeria, which is both the most populous country in Africa and the country's largest economy, did not support the agreement either. So there's trouble in paradise.
So this may not be quite as global as they are making it out to be.
Oh, and then you get down here to, they talk about what's going on in this country. The questions remaining. It can be easy to forget just how far the global tax talks have advanced since President Joe Biden took over and Treasury Secretary Janet Yellen made them a top priority. All right. So they were, well, yeah, because our tax rate right now is, I think, 21%, and I'm pretty sure that Mr. Biden would like to get it back up in the mid-30s or something like that. The politics of the moment in both Brussels and Washington will certainly complicate matters in the month to come. That's a good thing.
Yeah, let's hope that this whole thing just falls into the ocean and sinks to the bottom, and we never see it again.
Yeah.
But
that's in no small part because the European Union is still pressing ahead with its own digital tax, even as scrapping those kinds of levies. That's another kind of tax they're talking about. Those kinds of levies are prerequisite for key U.S. lawmakers to back the global tax. In other words, they want the EU to scrap their digital tax if they're going to seriously consider the global minimum tax.
Why don't we scrap the global minimum tax and we scrap the corporate income tax and we go to the fair tax, at least here in this country, and then see how many of these multinationals will come bringing their jobs to our shores.
Here's a really scary part for us in the U.S., Bob.
Okay.
Yeah. Yellen previously suggested that a proposed part of Biden's tax agenda, the rules on, get this, stopping harmful inversions and ending low tax developments, nicknamed SHIELD, all right, will be used against countries that aren't on board with the minimum global tax. So in other words, if we have a high tax rate here in this country, and it's forcing some countries to relocate their headquarters into another country like Ireland with a low tax rate, she wants to combat that with this SHIELD thing. She wants to punish those countries. It's what a mess. I mean, what a colossal disaster the income tax is, not only in this country, but when you're trying to do something on a global scale. Are they going to get all these countries on board with this?
I hope not. I hope this whole thing goes away and somebody, hope it's the United States. Remember, Neil Bort says he has been contacted by other countries that want to know more about how the fair tax works, and at least when they first did that, he wasn't going to talk to them because he wanted the United States to be the first country to adopt the fair tax and get Jade Wally's first mover advantage. The first country to cut their corporate tax rate to 0 and see how many people are going to come there. When you're the 4th or 5th one to do that, then all the good ones have already gone to the other places.
Yeah, the dominoes will fall in line because when the U.S. becomes the first sane country to get rid of their income tax, all right, and we become one of those dreaded tax havens, others will fall in line. This whole nonsense will fall apart. So we've got to do this. We've really got to do this. And in order to do this, we need everybody's help.
Yep.
This, I think I would paraphrase this whole thing as collective misery. All right. We're miserable because our tax rate is higher than yours. We want to share that misery with somebody else. That's what it is.
No, let's just get out of the income tax box of thinking, and let's go ahead and go with a fair tax here. We've got about 4 minutes left, and we've got a new item on our call to action. I don't know if you saw this morning. The former governor of Wisconsin, Scott Walker. I saw this. He posted on his Facebook page that he says, we need a flat tax.
Oh.
So he came out, Governor Scott Walker, he's no longer governor, but he was. He says, we need a flat tax. It'll help us get rid of the IRS and stuff that. So FAIRtax folks need to go to his Facebook page and set him straight. I've already done that. I pointed out to him, Illinois didn't like their flat state level income tax. They thought it was unfair and they tried to change it. And you still have to have the IRS if you're taxing income. So, and when this airs on Tuesday, the 13th, as we expect it to, this will still be several days old, but I imagine you can still go to Scott Walker's Facebook page and educate him on why he should support the fair tax instead of the flat tax.
A flat tax will not get rid of the IRS.
No,
all right?
That's the biggest lie that the flat tax people tell.
Yeah, the flat tax, just think of it as job security for the lobbyists. The lobbyists love the idea of a flat tax.
Yeah, go back into the archives a couple of weeks ago. We dealt with the fair tax versus the flat tax versus the income tax and discovered that the income tax and the flat tax are pretty much the same thing.
They really
go back a couple of weeks at FAIRtaxGuys.com and look up that episode and compare for yourself how different the fair tax is from the flat tax and the income tax.
And just look at what we have now. Over 75,000 pages of tax code and court decisions and so forth. All right. Yes, it's taken us 108 years. Actually, it hasn't taken that long because they pretty much flattened out the income tax in 1986 and they reduced it way down. So since then, they've added over 40,000 pages of more tax code and regulations. Okay.
Yeah. 39,999 of those pages were written by lobbyists.
Yeah. The lobbyists just love the idea of a flat tax because they get to start all over again. It is job security for the lobbyists. It is not good for the American citizen because even though it may start out flat at some point, before the ink is dry, the lobbyists will be in there schmoozing with Congress critters and trying to get the thing changed. Well, we need to have an exemption for this group, or this one needs a special deduction and so forth. It won't take long.
I just realized we haven't used our protest sign yet. Defund the IRS because taxpayers matter. Get rid of the whole system we've got now and go with a fair tax. And you could help that by going to the FAIRtax.org, signing up for the 1040 Club.
Absolutely. All right. Yeah. And that's that is the website of the main FAIRtax, the national group, FAIRtax.org. And you can, like Bob said, you can go to FAIRtax.org/1040, and in which you commit to sending $10.40 a month. Okay.
They still have the special at the FAIRtax store. That
FAIRtax store.
Bundle?
Yep. We got that FAIRtax store. You go there. They have a summer special in which they have. I'm waiting for the website to come up here. They have a bundle of windshield car shade, all right, FAIRtax cap of your choice in red, white, or blue, and a bundle of palm cards, all right, that would look like these. These are very handy to have. You can also get some of these pocket-sized cards, all right, FAIRtax prebate cards. We got new ones for 2021, so go to the store and order some of those and demonstrate your support for the FAIRtax. It's important.
The bundle's $20. Shipping is free, and that's going to wrap up this edition of FAIRtax Power Radio. See you next week from WTOB in Winston-Salem, North Carolina.
Looking forward
Until then, we're the FAIRtax Guys. I'm Bob Paxton.
And I'm Ron Malero.
Reminding you that the fair tax is the only truly fair tax, and once you understand it,
you'll demand it. Follow the FAIRtax Guys on social media and their own website, FAIRtaxGuys.com, and check back every week for a new episode of FAIRtax Power.